Let me guess, you're a trader looking for that one strategy that's going to take you to that next level of profitability. You either keep losing in the markets, you're winning and you're losing at this break-even stage, or you're profitable but just looking for that one thing that's going to help you out get these returns in the markets month to month. Stay tuned to learn the one thing that helped me out tremendously during my Forex journey to get to where I'm at now. I remember the losing stage. I remember the break-even stage where you're winning and you're losing, but then your losers are just sometimes outweighing your winners and you just keep losing. Even when I started becoming profitable, I always say this, there's a time where I would have considered myself profitable, but now looking back, I wouldn't have called myself profitable. Looking back, I wasn't doing the necessary things that I think a professional, consistently profitable trader should be doing day to day, week to week, month to month to improve their trading. I would sit down and look at charts every single day and just look for any opportunity to get into the market. Now, because of this one thing, I know my entry criteria, my exit criteria, all because of this one thing I'm about to show you. The one thing that got me to where I'm at now is
Hey, okay, let it be known. I'm working hard when I ain't on the phone. This ain't a hunt, this ain't a phone. Grind never stopping, I'm keeping it cold. Unlocking the door with the holy key. You supposed to be this close to me, and hopefully you understand G.O.D. Make me this cold and I'm talking like no degrees. This ain't a fluke, I seen it way before it ever happened. He gave me the view. I had to put in my time on the TV, it coming in soon. I couldn't leave it all up to a variant or an experience.
the one thing that got me to where I'm at now is collecting data and sample sizing to understand the reasons why I'm winning and the reasons why I'm losing day to day in the markets. I use this backtesting strategy that I'm gonna go over right now to show you guys that helped me so freaking much know when I should be getting in, when I should be getting out, and when I should just be out of the markets entirely. So first off, I wanna go over why it's important to collect data and sample size your strategy day to day in the markets. But once I started sample sizing and understanding why I was taking that loss or why I was getting hit out break even, that's what elevated me to the next level to then once again be able to compound, and my ROI monthly just increased tremendously. Guys, TradingView is like a book with just years of data you can go through and recognize patterns, recognize what's happening, time frames, times in the markets, kill zones that are gonna help you determine when you should be trading, when you shouldn't be trading, and if you get into a trade, why you're getting in that trade, and then when you should be exiting that trade. People who have worked with me before have always noticed how my entry and exit criteria are so specific due to the fact that I have had so many years of sample sizing and data that's gotten me to this place. So I know exactly why I should be getting into the trade, why I shouldn't be getting into the trade, and then why I should be exiting the trade at the place it's at. Let's get right in the charts to show you guys, but this is a trade I called live last night on my live stream. So if you guys have not gone to the Trading with Clarity YouTube and watched me, I'm live Monday, Tuesday, Thursday of every single week, where once again, I hop on, Q&A, I answer all your guys' questions, I break down charts, I analyze the markets, I draw out my zones, and if it hits our zones, we execute live and catch these trades live every single week. So make sure you guys go check me over on the Trading with Clarity YouTube. But going into this trade, what I want to go over is, once again, so we won the trade, cool. But what you guys are not doing is, once you win a trade, you're not going in back and understanding why you won. Sample sizing and collecting data is literally just going back to trades you've lost, that you've won, break even, no matter what it is, and then going back and writing notes of why price did that, what time you took the trade at, what pair it was at, what time frame you were looking at, and all the different confluences you took, so that over time you can slowly mark them off. All right, this didn't work, so let's take this off. This hasn't worked over the last couple months, take this off. But one thing I just said that's really important is how, make sure that you have months of data. Just because 1 week one thing wasn't working, you shouldn't just eliminate it from your trading plan. I've developed a strategy over the last 2 years to get to where I'm at, and you just can't mimic it. Once again, you guys have to go and do this on your own in the charts to get the same results. I'm gonna go over one really good example for my 8 SMA strategy that you guys all know that I talk about on the live streams and why I use it. So boom, we won the trade. I'm gonna go over real quick why I took the trade, but I'm not gonna get too in depth because this isn't like topic of the video. I'm gonna go over what I did after to determine how I can use this as data and how I can sample size this position to then help me in the future to catch a trade just like this. So look, I'm actually gonna go to the 1 hour time frame real quick to just point something out. It all had to do with kind of a break of structure, retracement, continuation. So you can see here that we broke above these highs. This was my break of structure to then wait for a demand to retrace to continue up. We come swept liquidity, broken structure to the top side to then retap into a demand. If I go to the 15 5-minute real quick, I'm just gonna show you guys that we had a beautiful demand sitting under these lows to tap into before continuing up after breaking structure. And even if I go to the 5-minute time frame, it was a 3-step within the 3-step. If you guys don't know what a 3-step is, I have plenty of videos in my VIP. I think I might have some on my YouTube channel about it, but it's like a liquidity grab, break a structure, tap into the supplier demand to then look for the continuation. So the break of structure truly happened up here, but on a lower time frame, once we retraced and then broke this low to tap into the demand, before we tapped in, we had rebroken structure to the upside. We had rebroken structure, tapped in, and then we took it at the break of the 5-minute highs. And as you can see, it was a huge continuation. So one thing to kind of go into with sample sizing and data is, what time did this trade happen at? We can go look, it was 10 minutes before the 4-hour open. So obviously we had volume in the market. We had created a low, we had created a support within a demand to then look for the continuation of price due to the higher time frames that we went over. So enough with the trade breakdown. Let's go into what you could do to capitalize on when to get out of the trade. So this is the meat of the video, guys. This is what I really want you to do, is when you take wins or losses, no matter what it is, go back. So this is a win. So let's go over what I would do once I won this. I'm gonna give you guys 3 really good examples of how to exit a trade that I used when I was backtesting to determine what my exit strategy is, which is if you're gonna get out of the trade, if it's breaking 5-minute lows, if you're holding till it until it breaks the high or the low of structure, which I'm going to go over, or until it closes back below or above the ASMA due to structure. So we're going to go over all those examples. It might sound confusing at first, but it'll make sense in a second. So boom, we won the trade, but what happened after price had come to our entry and we're in the trade? When do you guys get out? A lot of you guys will see a 1 to 2 like this impulse and get out of the trade, but have no reasoning to why you even want to get out. So this is why I developed exit strategies, back tested them for freaking months, for years, and then have determined over time that my exit strategy is overall going to give me the best percentage monthly. My overall or ROI will always be higher if I stick to these rules due to all the data I've collected over the last 2 years. So once again, 3 examples. Are we holding till the break of the 5-minute lows? Are we holding for the ASMA? Are we holding to the highs or lows of current structure? So for this particular trade, where is the highs of structure? Basically up here. This is the major high where liquidity is sitting, but this is obviously where I think stop losses would be. So if we were looking to take it to the top or hold until we broke, the structure highs of this current structure, this would have worked out. This obviously would have been a W. I could go back on my notes and go, all right, if I would have held till the highs, I could have exited here for a 1 to, what is that? For 1 to 5 risk reward. A 1 to 5 risk reward, guys, is absolutely amazing. You're risking 1% to make 5%. So if you would have held until we hit, oh no, it's all the way up here. So I marked up to the wrong high. It's actually this one. So this would actually be a 1 to 7. You're risking 1% to make 7% on this play if you were to exit once we broke structure, took liquidity in this area. It's wherever liquidity is sitting. So once again, as supply and demand traders, we're taking trades and a demand, looking for it to go take liquidity in the other direction, break structure to the top side before, we're looking for the overall move. We're not just trying to get into these 1-to-1 scenarios. So in this scenario, if we would have held until we broke, and took liquidity within current structure, it would have been a 1 to 7. What would have happened if we would have held until the closure below the ASMA, which is right here? If you guys don't know, my ASMA is this purple line. I'm gonna kind of zoom in so you guys can see it. But this purple line right here, we would have, the first closure was right here. So once it closed below, this is like a 1 to 4.6, you know what I'm saying? So you're risking 1% to make 4.6. So in this scenario, you would have made more holding to highs or lows, in this scenario highs, rather than waiting for the closure below the ASMA. What was the other one? It was break of the 5-minute lows. So if you would have held to the break of the 5-minute lows, which is, once again, we had this impulse up, 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 kind of consolidated, and then once you would have broken this 5-minute low right here, that would have been a 1 to 3.89. So this is when you go into your data, you go in while you're collecting data, your sample sizing, and you write, all right, in this particular setup, I took the trade at this time, it was in a demand, the structure was this, the SMAs were in this place, and I would have made, what was it, 7% if I held to highs, I would have made 4% if I would have waited for the closure below the ASMA, and I would have made 3.8% if I would have waited for the break of the 5-minute lows. So that's how you collect data. You go to all these trades, determine what happened, what would have been the best place to get out of it, and then over time, you're gonna get percentages that tell you what the best strategy is. So a lot of you guys know my strategy is the ASMA. So in this scenario, it didn't work. I would have gotten out a lot lower for what? I would have lost not lost, but I would have closed for 3% less than if I would have held to the highs or lows. But once again, this is one example of months and years of data. So I've gone back and done this with all my trades to determine what the best way to close is. So let's go find another example, because like I said, this is just one trade we took this week. We took some other trades up on GU up here, actually, I believe. Yeah, right in here. So for these ones, look at this. This was actually, I remember taking this live. I'm saying I took this on live stream. This one right here, this was a beautiful example of why I love my ASMA, because once again, the way I enter the trades is how I exit. So if I would have got hit out break even if I didn't have my ASMA strategy, because we got in, had this impulse, and then kind of came down. We used the ASMA actually as a support. We never closed below it. We kind of used it as a support. It was kind of picking price up, and then as you can see, we freaking hold, and then where was the closure? The closure was right like here. So we would have gotten out for a 1 to 0.5 basically, which are points, yeah, wait, no, 0.75. We would have got out for a 0.75, but once again, I've backtested this and it's shown me that, you know, it's good because you would have closed for a 0.75% instead of getting hit out break even. Because as you can see, after we closed below, we came and hit break even. Obviously it continued right after, but that's a whole nother story of if you're gonna put stops to break even, if you're not. It once again goes into sample sizing and collecting data to determine how you're gonna consistently be profitable and how you can consistently get the most money out of the markets daily. So let's go into this other example right here. Once again, the ASMA or holding till highs or lows or whatever. So for this example, let's look, where are the highs? The highs are all the way up here, so we didn't even go up. So if I would have had that strategy for this trade, it wouldn't have worked. Where's the 5-minute lows and where's the ASMA closure? The break of the 5-minute lows would have been like down over here. So that would have been for a 0.75, which also is around the same place we got the closure below the ASMA. So the ASMA would have been a little less for like a 0.7, you know what I'm saying? So there wasn't really a big difference there, but like I really hope you guys just understand that, like, pick a couple different ways you want to exit the markets and then go and backtest months of data during your session. So that's also really important. Is I trade Lennon session, so all these trades are during Lennon session that I know when volumes in the markets, when these pairs are occurring on these certain time frames, if I'm winning or I'm losing, no matter what's happening, how can I maximize my profits in the markets? Like I said, these are just 3 examples from the last couple days of trading. I've gone back with months full of data with these similar trades, and it's shown me that my ASMA strategy is forever going to get me the most money out of the markets. If you guys don't know what that is, come to my live streams, or I have a video on my channel for when to close your trade, but I actually use the 5 EMA in that video, but just use the same, you know, knowledge and the same things I'm telling you, but instead of using the 5 EMA, I now use the 8 smooth moving average due to all my backtesting. Once again, it's just sample sizing and collecting data that showed me this is what forever is going to get me the most out of the markets due to my strategy. Your strategy may be different. Guys, that's very important. You guys need to go with your own strategy and backtest on your own, all your wins, all your losses. Why are you taking that loss? Why are you taking that win? It's all so important to becoming a profitable trader to understand why you're taking that loss, why you're getting into the markets, what time you're trading at, when you should be exiting. These are all necessary things that are going to get you and bring you to that next level of trading. I'm telling you, that's what's going to make you a professional. So call it a strategy or not, this is my backtesting strategy that got me to where I'm at today with, you know, being consistently profitable, being a full-time trader for the last 1.5 years. I've been trading for 3 years, guys. I didn't just overnight get to this place. I've been backtesting and sample sizing day to day, every single day for months to get to where I'm at. So I hope you guys take this advice, go apply it to the market so you guys can go and get similar results. Once again, it's even cool that like my strategy that I know works didn't even work out with these 3 strategies. Like my exit strategy was not the best one out of these 3. So it just goes to show that you have to go back for months and determine at the end of the month, at the end of the year, what is going to show me or the best return on my investment, what's going to give me the most percentages, what's going to keep me out of the market the most, but then also keep my wins high. It's all, you know, it sounds hard, but it's really simple if you really think about it. So once again, pick 3 different like exit criterias, go back to all the steps you've taken, and then go back and then write down, all right, I would have made 4% on this play, I would have made 3% on this play. And at the end of the backtesting session, go and add each category up and show, all right, over the last 4 months, what out of these exit strategies would have gave me the most percentages out of the market. That is the best advice I can give you guys, is just being in the markets, learning from your mistakes, learning from your wins and your losses, and then just once again, sample sizing and collecting data to improve over time to become the trader you want to be. But I love you all. Hope this was a helpful video. If you guys need anything, my Instagram and my Telegram are in the description. Message me, I always got you guys. And once again, come watch me on the live streams on the Trading with Clarity YouTube, where I do this all for free and answer you guys' questions for free. Love you all. Stay tuned for more videos and make sure to subscribe and comment on the video something you learned. Love you all. Peace.